I don't know when this thing actually goes live. There's always like a 2 second delay. So um, if you're watching this, why's my shirt messed up? Okay. So apparently there is a little bit of a delay. My hoodie is messed up. Sorry. Okay, cool. So about to kick this off in a little bit. Live episode of the podcast. Give me about, sorry, I'm late to my own appointment. Give me about a 20, or sorry, give me like 3 minutes. They're going to go live on this Instagram thing as well. Yes, this is going to be talking about the ins and outs of this program. This is my first like live podcast recording. We'll see how it goes. Some reason I didn't know this was coming. So going to be talking about Bank of America's 0% down program. Give me 1 second. Going to start in like three or 4 minutes. So on YouTube, it's less choppy. Link in the bio to join. All right. Okay, cool. All right. All right, so I'm about to start in about 2-3 minutes. If you're watching on YouTube, my bad. All right. Okay, cool. So I'm going to be kicking off the ins and outs of the program, the pros, the cons, a lot of the whining I've seen about the program for some reason. So I'm live on YouTube, okay, or Instagram. All right, all right. And so, okay, cool. Okay, awesome. I got a like already. I always appreciate that. I wish I could see the likes, but big shout to you. I really do appreciate that. Boost my morale. All right. Okay, cool. So we're going to be talking about Bank of America's 0% down home ownership program aimed at helping minority communities, right? So I did the post today. A lot of positive feedback, I think, because I think a lot of times when there's positive feedback, like folks don't comment. But I'm honestly, I'm kind of like baffled at some of like the negative comments as far as the program. So I wanted to dive a little bit deeper into the program and address some of the complaints, and honestly, some of the whining that I've seen folks do about a program that they by no means even have to use. So let's talk about the program. So it is a trial program right now. It's just the beginning stages of this program. And so right now it's designated for Dallas, where I'm at, big shot to be, Detroit, North Carolina, Miami, and Los Angeles, right? And so it's designated for mostly minority communities in those areas. And so folks, one of the things I hear is like folks are saying that one of the complaints I hear folks are saying is that that basically, why isn't it for 100% minorities? And actually, I'm going to start over because I'm actually doing a live recording of my podcast, so I actually got to do my intro and all that. So gentrify your own hood before those people do it. Welcome to House Rich, the first time home buyer show. We help millennials figure out where do I get started in real estate and how to build generational wealth. Today, we're going to be talking about Bank of America's 0% down home ownership program that's really aimed at helping minority communities. The intro was sponsored by Brooklyn philosopher Sean Corey Carter III. All right, so let's jump into the program, right? And so it's a trial program. Why is it a trial program? Because Bank of America wants to see how it works. It's a 0% down program. It's a little bit of risk for them, right? And so the 5 cities that they're running the trial in are Dallas, Detroit, North Carolina, Miami, and Los Angeles. And so why those communities? I don't know. I don't have any insight for Bank of America on why they picked those communities, but the focus is on minority communities. So to be clear, the program is not just for minorities. It's not like you can't be a white person and use the program, or you're a black person, you automatically get to use the program. It's for minority communities. And so why is that? It goes back to like redlining and also what's called the Community Reinvestment Act. And so if you're completely unaware, up until 1968, it was like literally government policy to not lend to people in certain areas, basically based on the color of their skin, because the banks looked at those loans as risky and those people as risky, and they couldn't pay back those loans. So a lot of people lost a lot of wealth by just not being able to be lent to. And when they were lent to, they were like bad loans being lent to those people, like basically 100% interest loans, super high interest rates, and all that bad stuff. And so it was a super negative thing, right? And so where, kind of the next natural question is, hey, when are they going to roll this program out to other communities, other areas? I don't know. That's something Bank of America is holding close to the vest. I think they're going to, kind of run the program for a little bit just to see, hey, and to like collect some data as far as, maybe closing times, what type of people are actually qualifying for the programs. Technically, when you fill out a loan application, you don't have to declare your race, but maybe they're going to see, who's actually utilizing these programs. Because, it's, once again, it's not 100% for minorities, but it's for minorities to hopefully, gentrify their own neighborhood and help out and use the programs in their own neighborhood in order to move forward, right? And so, so I'm reading my notes right here. And so, I've heard kind of comparisons to the NACA program. It might be similar to the NACA program as far as like, they're not actually using your credit. They're using basically your ability to repay bills, essentially, is what they're looking at as far as the program, right? And so if you didn't know, like Bank of America is one of the main lenders as far as like the NACA program. So how the NACA program works is folks go through the NACA program, right? And then they then like Bank of America does the funding and all that. So Bank of America is one of the main funders of the NACA program. So maybe they're like, hey, the NACA program has a pretty good success rate. We're going to cut NACA out of the picture and just fund these loans ourselves, because that's what we're doing anyways, because NACA doesn't have money. Bank of America has the money in order to fund the loans, right? And so see a question right now, can you be out of state? Like, can you be outside of one of those Dallas, Detroit, North Carolina, Miami, or LA areas? No, you cannot. It is for a primary resident. So you don't have to like live in like one of the communities in order to buy the home. Like, you can live in Iowa, and if you want to move to an area in Dallas, which is predominantly a minority community, you can purchase a home there, but you have to be living in that home. And so the same underwriting guidelines apply to this as it does in any other situation, right? And so what it is you want to make sure that you actually have the income and that you can actually qualify for the program like you normally would. Like, you can't just move to another city normally and then qualify for a loan program in a city that you don't live in if you don't have any income in that city there. And so trying to toggle between YouTube and IG. If you want to hop over to YouTube, that'll be better because I can kind of see the comments better there. Comments get lost on Instagram, unfortunately, but I'll try to answer those questions as I see them come along, as long as it's kind of pertinent to what I'm talking about at this very moment. All right, and so what are some of the perks of the program, right? So there's no down payment, there's no closing costs, there's no credit requirements, and there's no minimum or maximum loan amount. So I think that minimum or maximum loan amount is a very important thing as well, because a lot of times, like in minority neighborhoods, like the properties are super undervalued, right? And so what happens in those neighborhoods is like some properties are worth like $20,000, $30,000, $40,000, right? But ironically, the banks can't lend on properties where the loan amount is so low, because what happens is, due to the fees and all that, which are just standard fees for loans, it becomes like predatory lending, because like your closing costs and your fees will become like 10% of the loan amount. So legally, like, the banks cannot do those loans. But I think it's important that there's no minimum loan amount, just as important as there's no maximum loan amount in this scenario as well. And so I got a question: is this for first-time home buyers? I'm pretty sure it's targeted for first-time home buyers, meaning somebody that has not purchased a home in the last 3 years. But ironically, I've not seen that specified, but I don't see why it wouldn't be for first-time home buyers. That would be my assumption, but I'll try to figure that out later, or you can look it up and report back to the chat if you want to, if you want to as well. But let's talk about the no down payment part, right? And so, another thing I hear as far as like the no down payment part is that, hey, I don't know, that people always think the housing market is crashing, right? They're like, oh, the housing market is crashing. You're putting people in the homes that are going to be underwater, cry, right? And so there's no down payment required from you, the buyer. You're free to put down any down payment you want. And also, I'll get into it later. Bank of America is giving the borrower between $10,000 and $15,000 or 3.5% of the purchase price in order to go towards the down payment, right? So they're helping. So you're not going to be underwater automatically. You're actually going to have at least 3% equity on top of the no down payment. So it's no down payment, and then either like a $10,000 or a $10,000 to $15,000 grant, or I think it's up to those, but at least like 3% of the purchase price as well, so that, hey, you are going to have at least 3% equity in that property already off the break. So no, you're not going to be in the hole as far as off the break when it comes to the loan program. And then so there no closing costs as well. So another thing is like, hey, they're saying no down payment, but what about closing costs? What about closing costs? Where it's like, what do you want from Bank of America? Feel free not to use the program, right? But I mean, even if it was closing costs, I mean, okay, you're not paying a down payment. Like, there's going to be, you can't have every single scenario at your disposal as far as that. But they're like, hey, we'll even give you no closing costs as well, right? We're going to give you a big shout out as far as that part as well. So I can't see what's going on IG. I'm sorry. And so let's talk about the other part. So there's no minimum credit requirement, which is a huge win, because a lot of things I hear folks talk about as well, and I agree to an extent as well, is that, hey, maybe credit scores are biased to a certain extent, because, hey, if you don't come from a family with home ownership and you don't have a home and you've been renting, your credit score doesn't factor in your rent or other stuff that people in underserved communities, if you're paying your rent on time for like 10 straight years, right? But the credit score is not factoring your rent, like that's unfair to you. Like, what's the difference between somebody paying their rent on time for 5 straight months versus or 5 straight years versus somebody paying their mortgage for 5 straight years? It's the same payment. Maybe the rent payment is even more than the mortgage payment, right? And so they're like, hey, we're not even going to factor in your credit score as well, but we will factor in your ability to meet your financial obligations, right? And so what does that look like? Well, one, they're going to make sure you have like some form of credit score. Like, they're going to make sure that you have like at least 2 credit scores. So you can't be just like fresh off the gates or something like that with like no credit history. But you can have apparently like a bad credit score as long as you have 2 credit scores, because they have to have some way of like monitoring your history of making payments and your credit history, right? Sorry, nobody can join this live. Hop on YouTube if you want to do that. Nobody's joining the live over here. Sorry. Maybe a little bit later once I'm done with the whole program. And so they're like, hey, we're going to look at your ability to make payments on time. So what does that look like? I'm not a Bank of America underwriter, but I'm sure they're saying that, hey, we're going to look at their credit score. Maybe 3-4 years ago they had some credit blip that's hurting their credit score now, or maybe even a bankruptcy or something like that. But hey, the last year or the last 11 months, they've been able to pay their bills on time and have not had any serious credit issues. Maybe that's good to go. Once again, I'm not a Bank of America underwriter. I don't know their exact underwriting criteria, but they're basically looking to see if you have a history of making your payments on time recently. Basically like the last year or so, as far as that program there. And so boom. And so so what are they going to look at as far as your credit? They're going to evaluate like your utility bill. Hey, have you paid your utilities the last 12 months in a row? If you're good, thumbs up. Have you made your phone payment the last 12 months in a row? Boom, good to go, thumbs up. Have you made your car payment for the last 12 months in a row? Boom, thumbs up. Have you paid your rent the last 12 months in a row? Yes, thumbs up. Like I said, I'm not a Bank of America underwriter, but I feel like if you've not paid your rent if you had late payments on rent, you're probably going to be, down bad as far as qualifying for the program, unless you have some sort of great explanation as far as, why you missed out on your rent payment. But boom, so those are some basic things that no matter what community you come from, socioeconomic background you have, like those 4 things are something that everybody should be able to accomplish. I don't think anyone can, people can, I guess, complain about anything, but I don't think anybody can complain about those 4 sets of criteria as far as what Bank of America is evaluating when it comes to your credit. And then so let's talk about some stuff you need to do on your end. So you have to do what's called like HUD counseling. HUD, I forget what HUD stands for. Housing and Urban Development. So you have to do like some training as far as HUD counseling. So it's either typically you can just do like an online training. I think it takes like an hour, or you can do like an in-person session as well. I think those are like 8 hours. Given the option, I think you always want to go with the online training as far as HUD counseling is kind of my general opinion on that. And so and then kind of the last part is that just another thing like buried in the bottom of this article, right, was that Bank of America is giving up to $25,000 to help small businesses in these communities as well. So I guess I would may do a totally separate video on that as well. But I think that's awesome that they're giving $25K to help with businesses in that community as well. And so boom. Okay, cool. Going to jump into the questions now. So I guess you jumped in late, but so the question I got, is this nationwide or only in certain states? So once again, it's right now in Dallas, Detroit, North Carolina, Miami, and Los Angeles are the states that this program is in right now. So what do we got? If you drop the question on IG, maybe ask it again. It's hard for me to go back and find all these, to find the questions that were previously answered. So what if you have no rent because you're a property manager? So once again, there are other things that they're looking at, which once again, it's utilities, phone bills, car payments. So I think they will look at those areas as far as what's going on as far as your payments there. And then so I was kind of thinking, I think some things that I have questions about as far as the program. I don't know if anybody who works for Bank of America wants to answer these questions, but some things I think when you're talking to like a Bank of America lender, because that's the best person to get answers for as far as this program is like, hey, how quickly can Bank of America actually close these loans? So I know they've had previous loan programs, and typically what I've heard is the closing times are up to like 60 days. So honestly, that can be an issue. 60 days is a long time for a loan to close, especially in this market, even though the market's kind of turning. But you're not going to be competitive if there's multiple offers on a property and you're like, hey, I need 60 days to close on this property. And so, maybe you want to look at properties that aren't, as desirable if it is a 60-day timeline. But I think that's an unanswered question as far as, how long it's going to take to close on these properties. And then two, the lien they put on the property seems to be forgivable. But a question I would have as well is, I don't have the answer, is how long do you have to actually stay in the property? Is it like, can you stay in there for like 5 years? A lot of programs is like 5 years is the time frame for staying in the property, and then you get to kind of carry on your merry way as far as the property. And then are there any like rate disadvantages? Sometimes programs have like rate hikes to them. I feel like that's not the case, because like programs I've seen for like Chase and other lenders that are targeting like minority communities is the rates are actually sometimes even less than the market rate. But I think a question you want to ask your lender is like, hey, what type of rates are they going to be with the program? And then is there any like DTI or debt to income ratio issues as well? Because I saw that there's no income requirements, but I'm not sure how they're factoring in your DTI. Maybe once again, it's just a history of making payments, but I don't know if there's any debt to income ratio or DTI comments or DTI issues as far as this program. And so, cool. If y'all got any specific questions as far as anything with the program, drop them into the chats, because that's kind of what I had to cover as far as the program itself. But I'm actually going to run through these comments, because I want to address some of these comments that I see folks mentioning about the program, and I'm actually going to address every single one of them. And so, one comment I kind of see is like, hey, I don't trust Bank of America. Well, it's like, okay, like my response to that is like, do you trust yourself to do your own research, to do your own due diligence on the program? I mean, like, I don't understand like what people's issue is. There's a lot of these issues just people that haven't done any research. And big shout to you for hopping on this live or listening to the podcast at YouTube. Is you got to do your own research and don't just follow blindly anything anybody says, whether it's Bank of America, your favorite lender, your friend lending program, somebody your lender recommended. Do your own research as far as the program, right? And so another thing is like I wish it was in like other areas that weren't gentrified. And so my response to that, of course, is like, what makes these other areas so great, right? I don't know. Is it? And I'm just going to jump right to it. I guess maybe because people think that like white people live there, that the areas are better than other areas. I could say maybe people think that other areas are better because there's less crime. But once again, I think a lot of times folks associate minority neighborhoods and crime. They think those are synonymous. And so, yeah, in some neighborhoods, disadvantaged neighborhoods, of course, crime is higher than other neighborhoods. But I think people think that there's like a 1-to-1 ratio where like minority neighborhood automatically means that there's crime in the neighborhood, which is just a bogus accusation to make there, right? And so let's see what other comments we got. Something to do with inflation. I mean, I don't really know what that has to do with anything. And so, one in the comment is like, hey, Bank of America thinks that they're trying to get people to default on the loan and take their house. Once again, so here's the thing. Your lender does not make money from you defaulting on loans and then buying your house. That is not a thing. So how your lender makes money is you get a loan, the loan performs well, they package up the loan, and then they sell the loan off to investors. If they have a history of all their loans defaulting, they can no longer sell these packages of loans out to investors and they don't make money. So this whole idea that Bank of America or any lender wants your loan to foreclose does not make any sense. And so we got another comment, read between the lines. They just want to push people out of the neighborhood or something like that. Once again, what's stopping the people in the neighborhood from utilizing these programs? I don't really know what the answer is to that, right? Bank of America is not good. Read fine print. I don't know. And once again, the comment is gentrification. So what is gentrification? It's so I'm not going to get into the literal definition, but the definition that when people say gentrification is like, hey, somebody is moving into this neighborhood that looks different than the folks in the neighborhood. So that's happening already. It's not like prior to this. It's not like there was no gentrification prior to this program, right? Gentrification was happening anyways. This is giving people in the neighborhood an opportunity to actually purchase in their own neighborhoods and make their own neighborhoods nice, because the neighborhoods that folks look at as gentrified were once, quote unquote, bad neighborhoods to begin with. And then people moved in, bought homes, fixed them up, and made them look nice. So why can't the people in the neighborhood just do that as well? Unclear why that can't be done. There's something, the banks are going to benefit more than the buyers. Yeah, the banks are in business to make money. I mean, I don't think that's ever been a secret, but nothing is saying that you can't use this program yourself, right? Are other banks offering similar programs? So I did a post on that. If you follow me on IG, it's actually one of my pinned comments, but Chase has a program where they're giving up to $5,000, and Wells Fargo, which I think people dislike even more than Bank of America, I think they have a program where they're giving, I think it was up to like $15,000 as far as that program from Wells Fargo. So yeah, that is another option or opportunity, is the program with Wells Fargo. And sure, you may want to check around. And so pretty much all cities have some sort of money set aside for down payment assistance. Honestly, just Google the words down payment assistance and Google your zip code, and something most likely will pop up. All right, let's see what other comments we got as far as this. Sounds like NACA, yes, similar to NACA. Is this program is just like redlining? I don't really understand the comment. It's literally the exact opposite of redlining. They're actually giving the money to people only in certain neighborhoods, versus redlining, which was denying excuse me, which was denying loans and financing to people in certain neighborhoods, right? So I don't really understand that comment at all. What about Minnesota? No timeline for Minnesota. Something about Sean King. I don't know. I guess they think they're being cute. Thank you. Oh, you're welcome for that. And so, what about 0% interest rates? What about them? Why would any lender give a 0% interest rate? That doesn't really make any sense. Someone's saying it's a good start. Yeah, like I said, literally it's better than nothing. The opposite solution would be for Bank of America or any lender just to do nothing, right? I mean, think about that side of the coin. Gentrification incoming, cries and victim mentality incoming as well. You don't trust it. Okay, it's a trap. You know, people are going to stay poor and have a poor mentality. As far as that, Bank of America and Wells Fargo turned down more Black and brown people than any other bank. That is true. But guess who actually lends to more Black and brown people than the bank? It's a volume thing as well. So I don't know. People are just going to, I guess, complain just to complain, right? Mortgages priced at an all-time high. Literally, mortgages are always at an all-time high. That's how prices work, right? Sketchy or something like that. Blah blah blah. Somebody wants to share it with their family. They're scared to share it. Don't share it. But like so, does always do your own research. Once again, like who am I? A friend is somebody's compared this to 2008. Your friend doesn't know what they're talking about. And neither do you. This is going to be the end of the real estate market. Oh, okay. Now they're just responding to like dumb comments at this point. But everyone's entitled to your own opinion. I guess it doesn't. So everyone's opinion doesn't hold weight in my opinion. So once again, that's all I got. If y'all got any more questions or comments, feel free to drop them in the comment section. But outside of that, I appreciate you joining me. I'm about to log out of this, and it will be up on my YouTube channel. Oh crap! I was going to host this as a podcast, but I forgot to hit record, didn't I? Let me check this out. But yeah, that's the end of the podcast. As rumor has it, buy land. They're not making any more of it. I did not hit record on this live. So oh yeah, I saved it on Big Shot IG. I'll just upload the IG thing as far as the podcast. So yes, that is it. Tell a friend to tell a friend. Thank you for joining me. Leave a review, comment, like, and go buy you some land, whether it's from Bank of America or whoever. I'm out.